people start to get this idea that all of a sudden, BRICS countries are going to be using, gold currencies and physical bullion to settle trade and this and that. And so their imagination kind of runs. I would suggest that people have a lower expectation as to what's going to come about from that.
Hey everybody, and welcome back to Silver Seeker. Today we're going to be talking about a possible gold-backed BRICS currency, CBDCs, and more with James Anderson from SD Bullion. Now James is a wealth of knowledge and has great insight, so I hope you stick around and listen to the interview because we'll be covering those topics as well as what's going on with gold and silver and more. So let's not waste any more time and get James in here, but before we do, don't forget to like and subscribe and help us continue to grow the channel. Make sure you don't miss out on your chance to win a full monster box of Silver Eagles by going to our sponsor sdbullion.com/silverseeker and get your entry today. Hey everybody, welcome back. We are joined once again by James Anderson with SD Bullion. James, how are you today?
Good. Thanks for having me back on your channel.
Awesome. It's always a pleasure to have you. Everyone loves your insight, and I'm glad to have you here as well. I want to get started. Obviously, we're going to talk about silver and gold today, but one thing that I don't really talk about much on my channel is the whole BRICS currency. And, there's all sorts of rumors and stuff going around about BRICS creating a currency backed by gold. I've heard that's been debunked like 20 times, but I don't really know. I'd love to get your insight into what's actually going on there. So could you kind of fill us in?
So I think the original story seemed it was broke. I'm trying to remember exactly how it went down. It seemed like Jim Rickards is a famous author in the precious metals-esque industry. I mean, he basically writes a lot about currency wars and various things. He's like a #1 bestseller. He's made like multiple books. I'm sure most of your audience knows who he is. And I think he made an article regarding and basically stating point blank that August 22nd to the 24th, there'll be a BRICS meeting, and at that meeting they're going to convene and likely come up with some type of trade settlement mechanism between the BRICS countries and maybe the BRICS associated, because there's like 40 of them total when you add them all up, those that are also interested in joining, that they would come up with some type of way that they would be able to settle international trade balance of trade by using a link to gold. Basically by doing that, they would more or less be able to subvert the dollar out of the middle of their trading for the long term. And so that's more or less his supposition. And he's still holding to it. I think I saw an interview this week where he's basically restating the same. The issue becomes that, people take that and run with it. And then people start to get this idea that all of a sudden, BRICS countries are going to be using gold currencies and physical bullion to settle trade and this and that. And so their imagination kind of runs and they think that August 22nd to 24th, that everything's going to change. I would suggest that people have a lower expectation as to what's going to come about from that. If they even formally admit that something's going on, I would be surprised that weekend. But it basically is coming one way or another, because I would suggest that the reason it's coming is because they're already working, and this is public information. It's been out there since last year. The Bank for International Settlements has been working with a lot of these countries. The Bank of China, the People's Bank of China, which is their central bank, the Central Bank of Hong Kong, central banks in Thailand, and various others. So they've run test operations where they're basically creating a system with not the CBDC retail system that we're supposed to be using at some point, us plebeians out there in over 100 countries. These CBDCs are supposed to be coming. It's the underlying aspect of the CBDC system that they're trying to create, which is, in every currency system, you need not just the retail top, but you need the bottom to settle trades as well. And that they have this thing called the MCBDC system, which would be balance of trade settlement directly using MCBDCs and subverting the SWIFT system, subverting and getting away from the dollar in between as an intermediary in trade, in a lot of trade in international trade between these countries. And so long term, that's very bearish for fiat US dollar demand. And if anybody thinks the one thing I think, if you look back, it's 2023, if you look back, say the last 2010, 2008, 2009, back then, I mean, the difference in change in the internet, the speed, the ability for us to do this right now, I mean, this has all come on rather quickly. It seems like the last decade or 7-8 years that this has come on and become, profuse. It's everywhere now. And all over the world, the internet has changed a lot of things, the way we live. And I suggest that that's basically what we're going to be seeing with the MCBDC and the CBDC systems that are coming online. it's 2023, come and see me early 2030s. It's going to be a different world, and trade settlement's going to be done in a lot of different ways, and increasingly so that way, I believe. I think the old mechanism of using banks as intermediaries and having these major commercial banks taking advantage of emerging markets, charging them all these fees and arbitraging their currencies and blowing out their currencies, and whenever they feel like raiding that economy. I think a lot of those countries are sick of it, tired of that, and they're using the Bank of International Settlements new system to try and gain some sovereignty and a little bit more authority over what happens within their own respective economies. And I think that's what this is. I think it's the same sentiment. And so my suggestion is just don't expect a month from now all of a sudden there's a reset and the gold price is 10 grand or more. I mean, that's basically the idea, is that just keep it on the long-term vision. This is going to take a little while, but it's coming. There's no doubt of that. It's public record they're working on this.
Okay, so when you talk about CBDCs, and I kind of want to get into that a little bit.
Sure.
What happens if we get there? Let's say the U.S. dollar puts out some sort of digital currency. I mean, is there the possibility that we could be forced onto that and outside of the paper dollar period? I mean, what do you think?
I don't necessarily think they're going to try and do that quickly, where they try and force cash out of everything. I would suggest that if you look over at Europe, look at the way that they operate right now, I believe their reporting threshold for cash is a lot lower than ours. Ours is currently 10,000 fiat Fed notes or US dollars per transaction. If you use that, then somebody might file a SARS on you, a suspicious activity report on you. So yeah, the 10,000 threshold is important when it comes to anti-money laundering. But in Europe, the number is, I think, below. I think it's almost like $1,000. It might be even lower. It might be like just under 1,000 euros, where they actually report cash transactions, or they're forced to. That's certainly what's going on in France, and I'm guessing that's probably the same in all of the EU, or at least that's what they want. And I would suggest that's what we're going to have in the United States at some point. I mean, it's similar to Europe. I would expect that you're going to see us lower our AML reporting requirements, and you'll see 10,000 maybe turn to 1,000 at some point, when the Treasury wants to get an even deeper understanding of where people's cash is. I mean, right now they have, I think, the ability backdoor, or they should soon, backdoor ability to go into your bank account and find your records for transactions over $750, I believe. It's something very tiny. So I would expect there will be something similar in cash on the street level as well.
So do you think the government will, you said it won't be overnight, but I mean, do you think there could ever be a time where the government just, we move on to CBDCs and it becomes such a part of society that the government just says, hey, turn in your cash, we're going pure CBDC? Is that a possibility? I'm not saying near term, but
yeah.
just...
I don't think so, because I think, they have to have some redundancy in terms of technology. Like if you have, for national security reasons, if you have a natural disaster and the grid goes down, locally you can probably still trade with CBDCs, because that's what they're trying to design into it. The fact that you're able to use them and pay with them even without the internet on a local level. But if they say there's not enough electricity, or you're in Puerto Rico and they just had a huge hurricane in 2017, cash was king in 2017. If you didn't have cash, you were pretty much screwed on that island. And that was a good test case for why not having cash in this society is dumb. It's very stupid, and it's really it's a national security risk. And so yes, having some cash in the system makes total sense for the powers that be that want to keep things in order in the worst case scenario. Worst case scenario is to talk about a sun flare or something along those lines. Having cash will make sense, and so therefore I just think that it would be very short. I think people get a little too extreme in thinking that cash will be completely outlawed, but it'll be less used, let's say, and it won't be as much in terms of, and it will be tracked as well, more so than it's ever been once those systems come online. Yeah,
and keep in mind, I'm not thinking that this would happen myself. It's just I get questions and comments like that from people all the time.
Yeah, totally, and it's one of those things. It's like the boiling frog thing. It's slowly but surely it's coming on, and you can kind of see the trend as the way it's happening. And it might not be like a switch that happens immediately, but at some point we'll have an economic crisis, and in order to get your government stipend, or when they burn more currency out of thin air, maybe this time they'll say, well, go ahead and get your direct U.S. Treasury account or your direct Federal Reserve account, and there you'll get your monthly MMT stipend. And you can bet that 99% of people will upload and get that because it's free currency in their mind. And so, yeah, there might be a certain percentage of the population that will just totally say, no, I don't want that. And there'll maybe be another way that they can get their free government check and handout. But that's what ultimately is what they'll probably launch it with, is some form of getting people to adapt to it very quickly.
Okay. So what's on the horizon for gold, though, and silver for that matter, at all right now? I mean, it seems
Yeah.
there's a lowering of demand in the physical sense for sure. The spot price has been kind of sideways outside of a little bit, a little peak here and there. The last couple of weeks, it really hasn't done a whole lot. Could you kind of dig into what's going in there?
Yeah, sure. I mean, we're basically in a sideways range, and we've been in a sideways range for how many years now? I mean, if you look at the data over the last, let's see, 3 years or so, since the middle of 2020, we've been hovering between 2000 and 1700 was a low, and here we are at 1964. So we're at the top of the range, and we're on the cusp of likely a recession that's coming. And in that recession, they're going to have to start cutting the interest rates, I would presume, and we're going to start moving into a system where they're going to have to start doing yield curve control because there's just not going to be enough demand out there to buy all these, U.S. debt. And so what you'll end up having is full monetization, where the Federal Reserve is buying a lot of the U.S. Treasury's debt. And so once that starts to happen, once their balance sheet starts to balloon even further, then you'll see people running from the bond market into precious metal sector, and that should help rise the valuation of precious metals as time goes along. And I would fully expect that the S&P 500 will underperform gold as we go through this time frame. I mean, I was looking the other day at the long-term chart for the gold price to reach the S&P 500. S&P 500 is over 4,000 right now. For it to go 1-to-1 and be equal and at par with the S&P 500, that's been half of the last 100 years. That's been the situation. I mean, during the Great Depression, all the way through World War II into the 50s, that was the case. And in the early 70s to 1980 bull run, that was the case. It was below, gold was more expensive than the S&P 500. So you have a situation with, S&P 500 is over 4,000. I presume gold is going to meet the S&P 500. I'm not sure exactly where, probably in the 3,000s. And then it'll probably outperform it for a while there because you have a bull market here in gold that's larger than anything that's ever come to pass before, and things like that generally end in mania. And so I assume that this will be the same case, but it'll be a global mania, and it'll be the largest one that the world's ever seen. It already is in terms of various ways that we measure it, but I would expect that you will see it outperform the S&P 500 sharply as this decade plays out.
So what about silver? Silver going to follow suit, or will it lag
Yeah,
behind?
of course. Yeah, I think you have the same situation. It reminds me a lot of like 2010, where the beginning of 2010, like silver was kind of not performing well, and gold kind of started really making a move, and silver kind of lagged. And then eventually came August, and silver really broke out and made a run up until obviously April of 2011, where it more or less ran from like the high teens to $50 an ounce in a matter of a handful of months. And so that can happen, but we really need you really need the situation to be on the macro level to push over. You need the Federal Reserve to start cutting rates. You need them to start showing their cards of the fact that they're going to have to go yield curve control, the fact that they're going to have to explode their balance sheets. That's all the things that are going to have to happen before you see the long side and silver on the comics really start ganging and winning on a day-to-day basis and really ramping up that price in terms of the spot. So yeah, I would expect to see gold outperform in the beginning. That's generally how bull markets go. Gold starts to make the move, and then silver starts to catch up later. We have the gold silver ratio at 80 right now, roughly. To see it go back towards 2011 low of 33 is something that I expect before this all ends. And to see it go back into the 60s as silver starts making its move, I would expect that would be the closer medium-term case. But the longer-term case is for that 2011 33 low of 2011. I mean, this is 2011 was the warm-up to what we're going to probably end up seeing. And, silver going beyond 50 an ounce is something I fully expect before this thing dies out and kind of plays itself out.
Fair enough. And you said the Feds need to start cutting rates. Do you think there's any chance of them doing it anytime soon? I know the last report I looked at said probably early next year.
Yeah, that's what the market expects. But you never know. I mean, there could be all of a sudden something that comes up and the market goes into a tailspin, and it could happen faster. I mean, I think it was in 2019 where they did the pivot in December where Mnuchin was down in Mexico, and he had to get, they had to bother him during his vacation on the Christmas Eve. He had to convene and have this report that he sent out and said that, the plunge protection team had a meeting today, and, we're going to get the markets back in order. And so basically they totally pivoted and made a change in the direction. They stopped raising interest rates and started cutting because the market went into a tizzy. And so, yeah, it's been much more sanguine, much more controlled this time. And surely they're in there always trying to keep the market propped because baby boomers love the stock market, and they, national security wise, need to keep the stock market propped as much as they can to keep baby boomers feeling rich, to keep the economy, the consumer economy, as robust as possible. They need to keep people believing that all those numbers that they see on the scoreboard are true wealth. And ultimately, they'll probably try and keep it nominally propped. I just think in real value terms, gold is going to certainly outperform, just given the context of where the world is and where we're probably headed in the next 5-10 years.
So with the market being sideways, I mean, could silver and gold pull back a little bit before we see this turnaround? Or, I mean, what do you think might happen here in the next, 3 to 6 months even?
I personally made a purchase at spot 22, and I'm looking at the charts. Just, it's possible that it goes below 22 if we do have some type of recessionary, deflationary thing where all of a sudden the market does this thing where it hits and bankruptcies start happening and people start pulling their long funds out of COMEX and you start seeing the spot fall. The issue with that is, obviously, if that happens on a sharp basis, kind of like happened in early 2020, you'll end up seeing the premiums on bullion just gap out or more or less stay where they are, the prices for physical products, and the spot might go down. But trying to time something like that is virtually impossible. I think that when you look at the overall market situation that we're in, the way that the silver has ranged for the last 3 years sideways, it's building like a powerful technical base. And if you look at the long-term charts, once it breaks out of that, it typically goes quickly and starts to make a move into the 30s, even the 40s very quickly. I mean, it'll be hard to get over the $50 an ounce level, but at some point it will, and then it's kind of free running. So I think anyone who gets silver in the mid-20s, 25 per ounce, is going to look at it long-term as being good value. And so I really wouldn't worry whether or not you get it at 25 or 22 or 28, this or that. I think those are small amounts of currency in the big scheme of things. I think it's really a question of, did you do it or not? Did you not? Did you get yourself a position that's large enough to actually hedge your overall wealth in such a situation that we're probably going to be going through? And so to me, it's prudent, I think, to have about 20% of your liquid net worth in physical bullion, whether you divvy that up between gold, silver, and even some platinum. That's really a personal choice. But mathematically, if you look back from 1968 till now, that's been a proven way to preserve wealth and to overall enhance your wealth position is by having a pretty aggressive size of physical precious metals in your investment portfolio. And I'm just simply talking about your liquid net worth. I'm not talking about your business or your home or any of that stuff, just simply what you have in your portfolio. Having 20% in bullion right now, I think makes prudent sense.
Fair enough. And I know I said that was about it, but I do have a question.
Sure.
Talk about platinum a little bit. Platinum seems like it's pretty low right now. Am I wrong about that?
No, I mean, in terms of overall history, if you look at a chart, I have a chart that goes back to the late 1800s, and back then, I don't think we fully understood the ability. We didn't have the ability yet to totally understand the properties of platinum. But throughout the world wars that we've had and the development of the military industrial complex, we've kind of figured out a lot of ways that platinum is used. It's a strategic metal. It's super important for various things in industry. And it's very, very rare, and most of it's coming out of South Africa. And so when you look at the overall supply, there's a big deficit that's been happening and probably will happen in the next few years as well, kind of like the silver market. And when you look at the value of it versus gold, it's about as cheap as it's been versus gold in the last 120 years. And, obviously this is a gold bull market. It's going to be driven for gold first and foremost, but later on you'll have the catch up between other physical precious metals like silver and platinum for varying reasons. And I just think platinum is a good, maybe not, I would suggest it'd be, a smart diversification amongst precious metals. I wouldn't, I have some platinum myself. I don't necessarily put more than a single percentage of my portfolio overall in platinum, but for right now, anything $1,000 platinum, I just think long term is going to be looked back as good value, especially with gold at 2,000. I mean, there's been long periods of history where platinum was more expensive than gold, and I suggest that later on in our lives that'll be the case again at some point.
Fair enough. Well, James, that's about all I had. But was there anything you wanted to add on that I didn't ask that you wanted to maybe bring up?
No, it's good to see that premiums are coming down a little bit in the physical market. So people who are going out there and looking for good purchases closer to spot are finding more attractive deals. And so that's a good thing. And hopefully that continues for a while before the next major crisis comes about or the next demand spike occurs, because it allows people who are diligently buying to get it at closer prices to spot. And so I'm glad to see that. So take advantage while that lasts.
You and me both, my friend. Definitely good to see those premiums come down. Well, James, it's been a pleasure as always. I look forward to having you on again in the future. Thanks so much for joining us.
I appreciate it. You do a good job on the channel. Thank you so much.
So James definitely gave a lot of good points and gave us a lot of things to think about. So definitely I'm going to ponder on that, and I would love to know what you guys think. So leave me a comment down below and let me know. Additionally, don't forget to follow James on Twitter. I'll put a link to his Twitter down below, or X as it's now called, as well as SD Bullion's own YouTube channel where they upload videos every week as well with a lot of market insight. Guys, thank you again for watching. Don't forget to like and subscribe like I said earlier. Check out this video right here if you haven't seen it yet, and we will see you in the very next video. Have a fantastic rest of your day.